Thank you all for sticking it out to the very end of this CLE seminar. Lucky for you, everyone's favorite topic is the final topic of the day. My name is Cameron Hufar, and I will be attempting to present to you as much as I can about the economic impact that COVID-19 has had. I tend to be a little long-winded, so forgive me if we do not make it all the way through this presentation. The first portion of it is going to be focused on changes in individual income tax returns as well as government stimulus payments. The second portion of this presentation will be focused on businesses, especially small businesses. Now, this is going to range from a change in tax filings to an extensive look at the Paycheck Protection Program, also known as the PPP, including a guide to the application and the steps towards forgiveness and more. If we have time, I hope that we do, the last portion of this presentation will focus on absurd misuse of the PPP and some criminal charges that have come out of it. So since we're short on time, let's begin. We're going to start by focusing on the individual impact that the coronavirus has had and the response by the government to help alleviate this impact. In light of the drastic economic damage caused by the pandemic, the IRS has extended the federal filing deadline for individuals to July 15th, 2020. That's again July 15, 2020. This not only extends the time to file, but it also extends the payment deadline for the 90 days from April 15th as well. Of the 41 states who have individual state income tax filing requirements, all have extended their deadline, with a majority matching the federal deadline. A few exceptions include Mississippi, whose filing date was May 15th, and Colorado, who extended their deadline to October 15th. In addition to Kansas and Missouri, which have all extended to July 15, Kansas City, Missouri, the city itself has extended their earnings tax filing and payment requirements and deadlines to July 15, 2020 as well. All right, so let's jump into stimulus checks. They were issued as part of the CARES Act to support struggling Americans. These stimulus checks come with various caveats as to who can receive the payment. Individuals who earn less than $75,000 or head of households who earn less than $112,500 and married couples who earn a combined income of less than $150,000 are entitled to full stimulus checks. Individuals and head of households should receive checks for $1,200 and married couples should receive $2,400. For any additional dependents claimed by taxpayers and the dependents are under the age of 17, taxpayers should receive an additional $500. For those whose income is higher than the cutoff, stimulus checks will be reduced. In each case, checks will be sent to the address on the most recent tax return. If a bank account is listed for direct deposit on the most recent tax return, the IRS will send the funds via direct deposit to that account. For those that have concerns because they've moved or they closed their bank account or the mail was returned for whatever reason, the IRS has policies in place for those individuals too. If your bank account has been closed, then your bank should send the check or payment back to the IRS, and then the IRS will send a check to the address on your most recent tax documents or your updated United States Postal Service address. For those who have moved, the IRS will send the check to the most recently listed address from the United States Postal Service and not on your tax return. Additionally, if your mail was returned, you may contact your post office in order to establish new residency and have your mail forwarded. As of May 19th, 140 million Americans have received stimulus checks under the CARES Act, and there is a discussion of a second wave of checks. The IRS has a lot more information on who's qualified and how you can even check the status of your stimulus check and try and locate it at the following website. It's www.irs.gov/coronavirus. All right, so looking past the brief individual COVID impact and response, businesses have also taken massive hits due to the pandemic. The IRS, the Department of Treasury, the Small Business Administration, and Congress have all put forth large incentives, funding operations for businesses during this time. We will first look at the way the IRS has changed the way taxes are handled for businesses during this time, and then transition to a deep dive into the Paycheck Protection Program, or the PPP. So just as for individuals, the IRS sought out to reduce negative economic impact on businesses by extending the tax deadline for businesses for both filing and payment requirements to July 15, 2020. This extended the deadline for all taxpayers, which includes LLCs, S corporations, and C corporations. As with individual filings, Missouri, Kansas, and the city of Kansas City, Missouri have also extended their business tax filing deadlines to July 15, 2020. Beyond the extension of the tax deadline, the IRS is also helping businesses through other means, including tax credits. The credit is issued as a tax credit against employment taxes up to 50% or 1/2 of qualified wages as an employer pays to employees between March 12, 2020 and January 1st, 2021. Employers are eligible for this credit if and only if there was a full or partial suspension of business during any calendar quarter because of governmental action limiting commerce or group meetings due to COVID-19, or if there is a significant decline in gross receipts. The tax credit is then applied to the quarter affected by the pandemic. If an employer averaged more than 100 full-time employees during 2019, qualified wages are generally those wages, including certain healthcare costs, up to $10,000 per employee, paid to employees that are not providing services because operations were suspended or due to the decline in gross receipts for the business. These employers can only count wages up to the amount that the employee would have been paid for working an equivalent duration during the 30 days immediately preceding the period of economic hardship. Employers with under 100 employees have qualified wages for the credit regardless of whether the business was shut down or closed. As you can see in the graphic displayed, there were various guidelines put forth as part of the Families First Coronavirus Response Act. For both caring for sick family members and school or daycare closures, the first 2 weeks of pay is 2/3 the pay of the normal salary for the employee taking the time off. The following 2 weeks for each category are unpaid, with a difference in pay only for school or daycare closures to follow. Quarantine or COVID pay is full pay for the first 2 weeks and then unpaid time off after that 2-week period. These guidelines apply to companies between 50 and 499 employees. While this is not a benefit necessarily to businesses, it does ensure that employees who are dealing with COVID are still receiving pay at adequate rates. In addition, the IRS recently announced that this pay would be eligible for refundable tax credits. This is to say that the paid time for employees will be reimbursed as a tax credit to the business, with excess pay coming back to the business as a refund. All right, now we're going to move on to an in-depth look at the Paycheck Protection Program, also known as the PPP under the CARES Act. First, we want to look briefly at the timeline of this program and what it has done in the short span of its existence. As you can see here, within 2 months, the program was released, funding was used, and the application for forgiveness was released, all before the deadline of the original application deadline had expired. The CARES Act was what birthed the PPP. CARES stands for the Coronavirus Aid, Relief, and Economic Security Act. The act was passed by Congress with bipartisan support and then signed into law by President Trump on March 27, 2020. The act was designed to help struggling Americans during the pandemic and stimulate the economy with the small business program introduced. The Paycheck Protection Program was the congressional solution to helping SBA-defined small businesses have access to funding to pay employees, rent, and utilities while out of business or with limited income. The program, however, left small businesses confused or doubtful about the true guidelines or rules of the loan, which we'll now try to help break down. Before we jump into the nitty-gritty, though, there's an overview of the PPP which is important that we cover. This is a program offered by the SBA and the Department of Treasury to allow small businesses to borrow from one of many approved lenders with the ability to have it fully forgiven. The steps for forgiveness will be discussed later. However, if some or all of your loan is not forgiven, there is a 2-year, 24-month repayment term on the loan with 1% accrued interest. Loan guidelines do not vary by lender, and thus businesses can apply to any approved lender and expect the same loan. All right, first let's discuss some dates. So the SBA released, in conjunction with the Department of Treasury, the application for the PPP loans on April 3rd, 2020, to companies who were defined as small businesses under Section 3 of the Small Business Act, including tax-exempt nonprofits, tribes, veterans organizations, and sole proprietorships. They also allowed hotels and restaurant franchises to apply if a single location did not have more than 500 employees, but this was later retracted. Then, 10 days later, the application opened to Americans who are self-employed or are independent contractors. The SBA announced the deadline to apply was June 30th, 2020, but encouraged businesses to apply sooner rather than later. A mere 13 days after the original application was released, the $349 billion of funding was depleted. It was gone. Then, on April 27th, 2020, another batch of funding was released so businesses could continue to apply for loans under the PPP. The application for loan forgiveness was released May 15th, 2020. However, no clear deadline has been issued for loan forgiveness, though companies should apply as close to the end of their 8-week loan period as they can. Lenders then have 60 days to respond to the forgiveness application with either forgiveness of none, some, or all of the original PPP loan. Amid various controversial company loans, the SBA released safe harbor guidelines. Now, companies who took out less than $2 million are assumed to have taken out the loan in good faith under the standard that loans should only be taken if current economic uncertainty makes their loan request necessary to support the ongoing operation of the applicant. Those who borrowed more than $2 million are required to present documentation that they did not have alternate options available to them to access funding to pay employees, rent, utilities, etc. Thus, a safe harbor deadline exists for companies that would like to return the loan penalty free and clear and not face the audit requirement and bear the burden of proving that this was their last resort. The original date was released in a tweet by the SBA that public companies should return all funding by May 7th, 2020. That date was later extended to May 13th and then again extended to May 18, 2020. Now, some public companies still refuse to return the loan, stating that it was in fact necessary in order to keep employees paid. Most notably of those companies are cruise lines that are no longer in operation but are in the public market, meaning that they have shareholders who can contribute before a loan would be necessary. Now that we've reviewed some dates and an overview of the program, let's look at what the loan actually is, starting with the application. Now, this slide here is showing what the top of the application actually looks like. Navigating it can be somewhat difficult, so let's break it down so we can get a better understanding of the application itself. The top of the application is rather straightforward. It should be filled out the same as all the other tax information. You've probably run through this a million times and have your business employer identification number, or EIN, memorized. and hopefully you do. But the next portion is the average monthly payroll for the business. Now, there is no true guide for what this looks like, but you should take your average monthly payroll from 2019, multiply it by 2.5, add any additional economic injury disaster loan advances you may have applied for through the SBA, and put the total in the second box. Now, the number of employees is the number that you had on the date of February 15th, 2020, which should be reflective of all full-time staff that you had before the pandemic. If you were not in business in the previous year for 2019, then the SBA states that you use an average of your payroll costs from January 2020 through February 15th, 2020. If you were not in business as of February 15th, 2020, unfortunately you are not eligible to apply for the loan. Seasonal businesses have been told to pick an 8-week period reflective of their true payroll costs from 2019 between the months of March and July 2019 in order to calculate their average monthly payroll. The bottom of the loan certifies that you are not a felon. Answer these boxes accordingly. Now we want to focus on where legal trouble can actually occur, your personal certifications. These include stating that all documentation and numbers provided are entirely accurate to the best of your knowledge, as well as forgiveness stipulations. Businesses are only eligible for one PPP loan, but you may apply to multiple lenders at one time. However, after receiving an initial loan, another loan cannot be collected under the same company or a subsidiary. Businesses also agree that funds will be used only on business expenses and that 75% or 3/4 of those expenses will be spent on payroll in order to be eligible for full loan forgiveness. Criminal charges for fraudulent applications or misappropriate loan spending are described and agreed to by the business applicant as well. The main kicker in the documentation, though, is that you must certify that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. While the standard SBA Credit Elsewhere clause has been waived, larger companies, public companies, and those who take out loans of more than $2 million will face audits that require proof of their need for the loan. This line of the application is what has caused several companies to return the loan in full before the safe harbor deadline and to seek funds elsewhere. The program was designed to help small businesses keep staff on payroll, not increase the cash flow for large businesses who have assets that can be used to continue the business as usual. Now that we've looked at the actual application, let's look at what loan size you can apply for based on your business, and then later discuss allocation of that funding. Each business is different. Loans are available up to $10 million per business, including subsidiaries, but many businesses were still unsure of the amount they could borrow. For those who are self-employed, they must look at annual profits up to $100,000 to complete the math for their monthly salary and then their loan amount. Small businesses with multiple employees must look at all payroll expenses annually for employees, including healthcare expenses, retirement expenses, and any taxes. There is still an employee cap of $100,000. All employees are added together and then divided by 12, with the same steps as self-employed to follow. This will create the eligible maximum loan amount. An example would be the following situation. A company has 3 employees who makes $85,000 annually and 2 employees who make $114,000 annually. This company will then sum all employee salaries, capping the two employees who make over $100,000 at an even $100,000. This gives you an annual payroll cost of $455,000. Now, we have to take that number and divide it by 12 to get the monthly payroll costs. Your loan total is allowed to be 2.5 times the monthly costs. So, we would take the $37,916.66 amount and multiply it by 2.5. The maximum loan amount for this business is then calculated at $94,791.66. Now that we've discussed how businesses calculate their loan amount, let's move to the appropriate spending of this loan in order to get full forgiveness. The main component of forgiveness is payroll. Expenses need to be divided such that 75% or 3/4 of the borrowed amount is used for payroll, including wages and tips, retirement contributions, health insurance, state and local taxes, and any other payroll expenses. The remaining 25% or 1/4 of the loan can only be spent on rent, mortgage interest accrued, and utilities. Utilities include electricity, gas, water, transportation, telephone, and internet expenses. To clarify, other expenses are not covered under the loan, even if they are required for business functions. Originally, there was confusion on the 8-week loan period entailed in terms of payroll timing and bills. However, after the forgiveness application was released, two separate loan lengths were released. First, the payroll cover period means that the 8-week loan funds must be spent within 56 days of the date that the loan was received by the employer. Second, the alternative payroll covered period allows businesses to take a loan and not begin their 56-day expenditures until after the first pay period from receiving the loan. This is most likely for companies that pay either biweekly or more frequently. In either case, rent, mortgage, and utilities must be paid within 8 weeks, even if the billing date falls outside of the time frame in which payments should be made early, or they will not qualify as part of the forgiveness of the 8-week loan. Utilities may be paid before the due date if costs are accrued in the 8-week loan period. However, this guideline does not extend to rent or mortgage payments. Now, as we discussed earlier, there are other stipulations that borrowers agree to when receiving the PPP loan. Again, all documentation provided must have been accurate. The SBA has stated that it will take businesses who applied for less than $2 million in good faith, and thus they will not be subjected to the automatic audits. Expenses must also only include what was discussed on the previous slide, and no other expenses can be paid with the loan in order to be granted full forgiveness. Coinciding with the payroll requirement, wages of employees must not be cut more than 25% during the 8-week period, or loan forgiveness will be reduced by the amount their wages were reduced. Finally, businesses must retain the same number of employees as the date of their loan application as they do on their loan forgiveness application. The SBA does not include guidelines that this must be the same employees, but rather just the same number of employees. This does allow for businesses to rehire employees at their same wages by June 30th, 2020, and still qualify for forgiveness. For employees that have been let go, if they decline to be rehired, they do not count against you as long as there is a formal written offer for reemployment made in good faith, as well as a formal rejection of that employment offer by the employee. Those employees who decline reemployment will also no longer be eligible for unemployment benefits. Now, with all these stipulations and caveats to forgiveness, you may now see the necessity for a safe harbor option and its deadline. As discussed earlier, the original guidelines of PPP allowed for franchise restaurant and hotel chains to apply for the loans. This meant that companies as large as Potbelly, with over 400 locations, had the ability and did in fact apply for this loan. The only stipulation was that a single location could not have more than 500 employees. After the expedience at which the first round of funding ran out, the SBA and the public in general took a look at borrowers, after which new guidelines were established. The SBA released a statement that public companies should not be applying as they have more market power and thus more available funding options than other small businesses. They also urged larger businesses to consider returning the loan, as it was only for companies who could not survive economic uncertainty. Large companies with many assets would find it harder to prove necessity in an eventual audit that comes with forgiveness. After this statement release, the SBA announced that companies have until May 7, 2020 to return the money without penalty. Again, that date has since been extended to May 18, 2020, and many companies have returned the money. However, some companies have refused to return the money because they fit all qualifications for the loan and do not believe that they need to return it under the original guidelines. Here is a list of some of the public companies that returned their PPP money on or before the safe harbor deadline. It's a very big list, so take a minute and see if you recognize any of the companies on this list. Now, while you're looking, let's chat about what the SBA has done and not done. The SBA has not yet released a full list of companies who returned the money. Remember, the list that you're looking at on the slide is only a partial list. Companies that are listed twice, it was not a mistake, I promise. Instead, they're companies that applied for PPP loans under separate subsidiaries under the same main company heading. There were no provisions in the PPP guidelines limiting companies from this type of application for the loans. Again, take a minute and review the list and see if you can recognize any of these. All right. With overwhelming loan amounts distributed, companies anxiously awaited further instruction and detail on the forgiveness portion of this loan. On May 15, 2020, the SBA released the forgiveness application, which left companies, unfortunately, with more questions than answers. The breakdown of this 11-page application probably deserves a CLE all on its own. Unfortunately, with our limited time this evening, I'll be brief in my overview, or I'll try to be brief. These next slides will hopefully reduce the headache that starts when you first take a look at the 11-page document. We'll break it down the same way we did with the original application, but we will sum it up quicker, hopefully quicker, given our short time together. We're going to show how to fill out the application on the assumption that all guidelines for forgiveness have been met and satisfied. The first section will again match all your other tax documents and your original loan paperwork. Businesses should already have this information on hand easily. Moving to the next section, all of this information should be available on the original loan documentation. If you cannot find this information, you can contact your lender and they should assist you with this information. For those that received their loan in multiple payments, under the loan disbursement date, put the first loan payment date, or the first date you received the funds. The employees at the time of the loan application can be found on the original loan application and the employees at the time of the forgiveness application should match this number. If this number does not match, be prepared for a reduced forgiveness amount or provide documentation about your attempted rehires and the denial of your such offers. Finally, for the end of the first section, indicate which pay period is used. Then, indicate the 8-week period in which the loan was spent. The alternative payroll covered period should indicate not the date that the loan was dispersed, but rather the date of the first pay period the loan was used. The end date should be 8 weeks, or 56 days, from that date, and not the disbursement date. The final box should only be marked if loans were greater than $2 million. Those who mark the box will automatically be audited as an additional requirement from the government for loan forgiveness. Now, borrowers are going to jump from page 3 of the application to page 9 of the application in order to fill out page 6 of the application and then jump back to page 3. Makes sense, right? Of course not. But if your payroll company is also a lender, then they're likely to have Schedule A completed for you, and you can request this documentation from them. That will make it a lot easier for you to fill out this application. If not, let's start calculating. The first step is looking at employees who make under $100,000 annually. Those employees need to be listed, their last 4 of their Social Security numbers listed, the amount of the money they earned, and their average FTE. Now, this is calculated by taking the average number of hours worked over the 8 weeks and dividing by 40. Then you round this number to the nearest tenth. This means that employees who worked an average of 40 hours will have an FTE of 1. No employee should exceed 1. Overtime does not apply. Finally, compute the salary or wage reduction by taking the salary during the 8-week period and dividing by the annual salary average. If it is 0.75 or greater, put 0 in the last column of the chart. Now, you have to repeat the same steps for this by calculating FTE for employees whose average annual compensation is greater than $100,000. Pay reduction is not necessary here because loan forgiveness will not be reduced given that their pay had to be reduced under the PPP loan guidelines. For the final box, instruction is thankfully quite clear. Add the sum of the FTE across Table 1 and Table 2 for the 8-week period. Then, calculate the normal FTE for the pay period, including the date February 15th, 2020. If Step 2 is larger than Step 1, recalculate the FTE for June 30th, 2020, the date allowed for rehiring of employees per PPP guidelines. Then move to the PPP Schedule A portion of the application. Now that the complicated calculations are complete, the Schedule A worksheet just has you sum all numbers from Table 1 and Table 2 into this worksheet. From there, you add the lines as instructed. The only additional information needed is business owner compensation, which is not to be included in the list of employees in Table 1 or Table 2. This FTE calculation comes from the bottom portion of the previous slide. Remember, if the hours of employees were reduced during your 8-week loan period, as long as hours are restored by June 30th, 2020, then there should be no FTE reduction, which would reduce your loan forgiveness. All information on this final step of the application and loan forgiveness calculation comes from bills and previously computed numbers. Follow the instructions precisely. No reference to other instruction pages will be necessary for this portion of the application, thankfully. Now, we're back to a signature page. This signature page verifies that the last 100 hours that you probably spent on this forgiveness application led to accurate reporting of wages and employee headcounts. It also verifies that the 75% payroll cost and that accurate documentation has been provided. There is a portion of the application asking for supporting documents, including documentation of wages, bills, billing periods, and more. This is located on page 10 of the PPP application and is relatively straightforward. From there, sign and submit your application. Once you're done, hopefully you should hear from your lender within the 60 days of the application submission. After all of that hard work, if businesses do not have their loan forgiven, they still need to know what happens next, including payments, interest, and more. The interest on this loan is 1%. There are no penalties for early payment, and payments are initially deferred for 6 months. Finally, the borrower has a total of 2 years from the disbursement date to repay the loan portion that was not forgiven. Finally, here's some fun information. Remember the pages where borrowers agree that they will not supply fraudulent documents or spend the money fraudulently? Well, let's take a look at those who have done both and where they are now. The first case of criminal infractions under the PPP included 2 men from New England. Both named David, Stavely and Butziger, were caught and charged after reportedly faking all documents for 4 non-existent businesses in order to receive over $500,000 in PPP loan money. The 2 Davids have emails back and forth with each other about the fabrication of these tax documents, as well as the fake business names and fake non-existent employees. Both Davids, Stavely and Butziger, have been charged in a federal criminal complaint with conspiracy to make false statements to influence the Small Business Administration and conspiracy to commit bank fraud. No sentencing has been formally announced yet. Another case is the case of Maurice Fain, also known as Arkansas Mo, who appears on Love and Hip Hop Atlanta as a frequent guest star. He was arrested on May 6, 2020, under charges of theft and federal bank fraud charges. He was arrested with $9,400 cash and a Rolex paid for by his PPP loan. He applied for the loan for his company, Flame Trucking, which reports an average monthly payroll cost, and this is monthly, on average, of $1.49 million. Fain reportedly spent $85,000 of his PPP loan money on jewelry, including his Rolex watch, as well as using the additional funds to pay child support. So at least part of it went to a good cause. To date, the Department of Justice has seized $503,000 in PPP loan money just from Arkansas Mo. Thank you for sticking it out to the end of the program. Normally we would be done by now. However, a few days after we recorded this presentation, a change into the PPP law happened. On June 5th, President Trump signed into law a whole bunch of changes to the program that I hope we can go over very quickly because it drastically changes how the PPP program operates and the rules for forgiveness. Again, since the recording of our presentation, the additional changes have been signed into law, and they are drastic changes in the management of the PPP loans. These changes cover virtually all facets of the original plan. We hope to break these down with ease, hopefully get into a little bit of the nitty-gritty details very quickly. We'll touch on the loan application process again, and we'll touch on the changes to loan forgiveness. Now, some of these changes include the length of time to use the PPP loan, the amount that must be used on payroll expenses, an overall extension of the loan, the requirements of payroll tax, and also the payback length. Now, while the guidelines themselves did not change that much, the duration of the program changed drastically. The PPP has been extended from the original date of June 30th, 2020, to now December 31st, 2020. This extends the date for rehiring employees as well as when you can apply for the loan, meaning that staff should be replenished by the end of the year and not the end of the loan program duration. Additionally, the 8-week loan period has been extended to 24 weeks for the time of disbursement date in order to spend the loan amount. In terms of payments, the original 6-month deferment of payments has been extended to up to 10 months after the covered period ends. Finally, all non-forgiven loan amounts will now have a 5-year maturity date instead of the original 2 years. I also want to briefly touch on other changes that came from the PPPFA, or the Paycheck Protection Program Flexibility Act. In addition to the changes of the loan itself, the forgiveness now has new standards. The standards require that employees must spend at least 60% of expenses on payroll, and anything below this will not be eligible for forgiveness. This is, however, good, in that anything below 75% of the original payroll expense is not reduced. The only cutoff that applies is the 60%. The other standards for what to spend the loan on include rent and utilities with other expenses. Finally, the PPPFA introduced an extension of deferred payments for payroll taxes. While the original loan guidelines only allowed deferred payments up to the end of the 8-week covered period, the new deferment deadline is December 31st, 2020. The payments from missing payroll costs will be made up over the following 2 years. Unfortunately, this is the conclusion of our COVID impact presentation. It was a pleasure to walk all you through the ins and outs of these government support programs with you. I appreciate you sticking to the very end of this program. I know it's very late at night, so you can go home and get some rest now. Thank you again, everyone. My name is Cameron Hufar. My contact information is listed on this slide for anyone who has further questions or inquiries. Have a good evening. Stay safe.